Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market rundown, going to go over some observations. As I've expressed at this point, you know I'm looking for bounces in this market with this current setup, but I'm being cautious, and I'll go over why I'm being cautious, of course, because it's in the face of weakness. But if you have been watching these videos for quite some time, you know that in the face of weakness is not going to scare me, and I use the example of running into the burning house to save the dog back on the December dump, and that was a timely video and a timely example. So what we're looking at on the daily time frame is essentially everything changed once oil broke $60. And again, if you've been watching, that for me was the shifting moment where consolidation got a bit more serious when oil lost the weekly uptrend. And that happened here on May 23rd. And you can see that we had a scenario where the bulls were buying every lower open and the bulls were just fine. And then oil lost 60. And since then, it's been a complete difference night and day in terms of bulls controlling the day trading and now bears controlling the day trading ever since 60 broke oil. Oil broke 60. So what we're looking at now, just a little observation. Number one, in this time frame, over the last 7 days of trading, closes at the low, indicate the potential of a gap down open. It's happened twice. Close at the low, gap down open. Close at the low Friday, essentially a gap down open today. And when we see a close with a lower wick, we generally get a higher open. So one time, 2 times. Now we have our lower wick with a bit of an end of the day buying of the dip from the bulls. The question is, can we see a higher open into tomorrow as the pattern has been? It's certainly not a very long developed pattern and established at this point, but there's enough that we can keep our eye on that. The pattern, the last 3 days of trading, has been strength pre-market heading into the open, a bull move first thing into the morning, and then pullback for the rest of the day. Thursday did it, Friday did it, and now today did it as well. That's why I'm staying cautious. If I'm playing oversold bounces, my ideal oversold bounce is very aggressive bears. I want the bears to be extremely aggressive and get oversold on every single time frame, because then the bears exhaust themselves. They essentially run out of breath. They run out of momentum and dollar volume. And then we see some really nice V-shaped bounces as the order books are cleared out on the way down. And then that allows for a really nice fast bounce on the way back up. So when you're cooling off RSI levels on the hourly time frame before you head into the open, that's not my ideal scenario. So I've been patiently waiting. I have been day trading a bit. I've taken some bullish positions, some bearish positions, but overall not really getting aggressive because the bears have not been aggressive from one day to the next. So what I'm looking at now is, can we get follow through into tomorrow? This end of the day bounce on SPY, again, it wasn't anything huge. It was just some short covering what looked like at the end of the day. We had a ton of stuff going on today. So tech sector dumped. And if you looked at only the tech sector today, you'd say, wow, SPY is down 1% to 2% today. But the financial sector held up, the healthcare sector and the biotech sector, they held up as well. And they were really the buoy for the market as the tech sector was dumping. And the reason the tech sector is dumping, Google started the day dumping due to the probe that they've got to be concerned about now. After Google, we had Facebook hit with similar news, and then we had Apple hit with similar news. So if you're interested in the details of that, go look at those individual companies. I'm not going to go in depth into the news. Bottom line is the tech sector was in free fall for a large part of today. Some of those names were down 6%, 9%. Facebook was down over 9% at one point today, which is obviously massive. If you look at the size of the market cap drop on a 9% drop on Facebook, it is big. So tech sector was dumping. Oil had a bit of a bounce play out from the open on Sunday. We'll look at that. But oil's still not proving anything. So the question is, can these SPY bulls break? And then we had news that the Fed is potentially looking to lower rates. And at this point, the market is pricing in lowering those rates before the end of the year. And they actually have websites that show you the odds of what the rates being cut or raised are. And I believe it's something above 90% that there will be cut rates by the end of December. So market beginning to price that in. We had the big spike on that. And then again, the fact that the market's already aware of that, we jumped all the way back. Didn't really do a whole lot in the grand scheme of things, but just the bottom line is a ton of activity as far as news goes for the market today. So what I need to see on SPY is for the bulls to break 276.55 to tell us, okay, the daily oversold bounce is underway, because the RSI is currently down at 31, and at the low of the day, it was right at the oversold level. If we can break 276.55, the daily oversold bounce is underway, and we can say, all right, anything under 280.04 is just a lower high. That's the line in the sand that the bears are going to be watching. There's a potential scenario where if we got a significant enough bounce, let's say to 278 or so, that we would be watching for a 4-hour inverse head and shoulders pattern. Again, this is just looking a bit in advance, but it'll all be about 280. And that's how I remind myself, if I'm looking at a bounce play, the longer term time frame is important. So if I'm in a bounce and it's looking great on the hourly chart, gotta zoom out on the daily and keep reminding myself we're in a daily downtrend, and anything under this level is just a lower high. So IWM held on pretty well today as well. So did some of the other emerging markets. And we had a support level of 145.32. It held by a penny. And then the bulls broke the high of Friday. Again, the bounce is already underway on IWM, the daily bounce. But anything under 149.58 is just a lower high, keeping the downtrend intact and keeping the bears in control. So that is the key resistance. That is what we are most concerned with. And if we don't break it, it's then up to the bulls to hold the recent low to try and change the daily trend. So we don't have to break resistance initially to change the trend, but in order to change the trend without breaking resistance, we have to top out, hold the low, and then break resistance. So that's what the week has to look like for the bulls to get follow through if we don't get any significant follow through tomorrow. QQQ, there's the bear volume and the absolute dump, the weekly time frame. We're looking down at 169.34. That broke just barely. We could call that a double bottom at this point because it only broke by 7 cents. But the daily RSI is now oversold. The 4-hour RSI oversold. The hourly chart getting that end of the day bounce. And we can say that anything under 173.05 is just an hourly lower high. That was where the morning bounce topped out. We dumped down, and then just a bounce cooling off hourly RSI. Have to change the hourly trend. When we do, we'll zoom out to the daily chart and we'll say, okay, bounce is underway, but anything under 177.27 is just a lower high on the daily chart. XLF. So that was the saving grace for the market today, along with those other sectors we mentioned. The bounce is underway on the daily time frame, solid big bull volume. Anything under 26.71 is just a lower high. The burden of proof is on the bulls. We're in a downtrend on the daily time frame. So the bulls have to prove to us that we're changing the trend. And we're going to assume that we're going to set lower highs until the bulls do start proving that. It is notable bull volume. And again, you look at this daily chart, how much bull volume are we seeing compared to bear volume? And it looks to me like there's a lot more bull volume with the lower opens and higher closes. We saw that a lot in SPY. This is where it changed. But here on XLF, we're still seeing it almost as frequently as the days that the bears control. So keeping an eye on XLF to form a weekly higher low, keeping in mind that 25.08 is the must-hold level. And if we can form a weekly higher low, we'll look for an equilibrium with a lower high compared to 28.14 and a tightening weekly range to be watching. XLV had some bull move today, but topped out with an upper wick. Again, we're watching this equilibrium on the 2-day time frame for clarity, which is still intact at this point. We have a triple bottom down at support. The bears have favor because we are closer to breaking support than we are to breaking resistance. Trying to turn my magnets on. So 90.85 is resistance. We've got support at 86.83. We did barely break those levels by some pennies, and we are now looking at anything under 90.18 just being a lower high. But where we stand, it would require about a 60-cent move, 70-cent move to break support, and to break resistance from here, we need about a $2.70 move. So bulls do need more follow through into tomorrow to have some comfort of staying in this pattern. And if we can see a green day tomorrow, the odds that we stay within this pattern into next week would increase a bit, in my opinion. XBI had a bull day today, but again, anything under 83.77 is just a lower high, keeping the bears in control. Lack of follow through at this point. This could absolutely be a daily bear flag cooling off short-term RSI levels just to see another leg down. So it's fine to be looking for bounces if you're comfortable doing so. Every trade just has to be protected when we're fighting the trend like this, because we can very easily see short-term weak bounces and another leg down. And that's why I like when the bears are in full control and it's more extreme, because if I've got the 5 and the 15-minute and the hourly, 4-hour, daily RSI levels all oversold, I know that the odds favor a short-term bounce, and that short-term bounce can give me enough wiggle room to establish a stop-loss level, or what my style is to scale out half of a position, take profit, and that lowers my cost basis of where my break-even point is on that trade. So just again, as a very rough example, let's say for SPY, I made an entry today looking for daily oversold conditions, and the entry I made, it's actually not a good example because I wouldn't have made an entry because the hourly RSI never got extended enough. So we'll just shelve that for now. VIX. So again, a lot of surprised people out there that VIX is not anywhere near its recent high from May, even though the price is much lower in the S&P 500, which is just a general good reminder that we're not inversely related. Well, we are inversely related, but we're not directly inverse to the S&P 500. So in my opinion, I've been talking about the monthly equilibrium that I anticipate to play out with our high, low, lower high, higher low. We're looking for a lower high compared to 3620 to stay in this monthly tightening range, which has been playing out for about 7 months at this point. Actually, more than that, 18 months, a year and a half, not just half a year. It's been a long time. But along with that, we have a tightening weekly range. So let's look at our high of the bull move, our low of the pullback, and now we're looking for a lower high to form compared to 2340. What would it take for these bulls to see a straight shot up over 2340? I don't know. In my opinion, there would have to be some kind of very significant bearish news to surprise the market. Tariffs are not surprising the market at this point. The Mexico tariff was a surprise, and the market had to price that in, but it wasn't a huge calamity. So tariffs aren't doing it. We've got all this tech sector weakness now with probes and potential regulation and all this stuff. That was being priced in today. But again, if those two things aren't bringing VIX even close to 2340, we can assume that the more likely scenario is that we're going to form a weekly lower high compared to that level and see this weekly time frame tighten up through June. So if we get a bounce on the daily time frame for SPY, we'll likely see VIX set a weekly lower high, and then we'll look for a pullback and a higher low compared to 1440. So the oil bounce today didn't get a whole lot of follow through. That daily RSI is still 23. I needed a change of trend on the 4-hour time frame, and this morning the play was clearly bearish oil. You look at this 15-minute time frame and how extended it was. The RSI was up over 70, and we didn't establish support on the way up. And then you look at the longer-term time frames and you say, yeah, great bounce, but we're just going to form a 4-hour lower high, which we did, and we saw significant pullback from there. For the bulls to make a statement on oil for me, we need to hold 52.11 overnight and then break 54.60 tomorrow to change that trend, and then our daily bounce would be underway, keeping in mind that we're just looking for a daily lower high compared to 59.67. So if you're looking at individual names, we can pretty much clearly say that in this market environment, there's a significant enough correlation with most individual names that we have to see oil and SPY bounce for individual names to bounce as well. And again, I'm generalizing. There are definitely individual names that'll do their own thing, but that's what I'm keeping an eye out for. Some other trades that I'm looking for tomorrow, gold. Gold has been absolutely on fire, but it's also very extended, and I'm watching for the potential of bear miners getting a short-term bounce if we see gold pull back a bit from its huge move. Look at this 4-hour time frame for gold. So we're clearly very overextended. The question is, do we see that pullback into tomorrow? And if we do, JDST or Dust, these names have been dumping the daily time frame, 2 huge gap downs, and we're watching for just short-term oversold bounces. So depending on how the morning setup goes, I'll be watching those names. Natural gas continues to dump, so much more clearly breaking 2442. The weekly downtrend continues, lower highs and lower lows. No sign of the bulls shifting momentum. I have drawn a couple times this descending wedge that I'm keeping an eye on, falling wedge with resistance right there and just a support line. And we're coming up on that support. So it's something I'm keeping an eye on. Again, I'm not immediately going to act on this anytime soon, but I'm watching it. And if the weekly RSI were to drop down towards oversold, then I might get interested. if we were still within this pattern. That being said, probably not the case. I haven't been interested in natural gas in a while. So overall, I'm still looking for bounces. I'm watching NVDA, Tesla, CGC, some beat up names in this sector, knowing that SPY and oil will have to bounce for those names to likely get any kind of follow through. If we see hourly bounces that do not change the hourly trend, all that is doing is cooling off the RSI levels, setting up the potential for another leg down. So yes, we're oversold on some daily timeframes, but SPY is just kissing that 30 level. SPY can easily drop down a daily oversold 25 RSI, which would mean another few dollar drop. So again, we definitely want to always be prepared that we're wrong on timing and we need to bail, and that gives us cash. If we bail at a break-even loss or a small loss, it gives us that cash again to do it all over again. And, you know, a couple small losses trying to get a bottom will far be offset once the actual bottom gets hit. And again, everything that I'm saying is coming from someone who's been playing bounces for 9 years. So if you are not experienced in playing bounces, it's very easy to lose a lot of money trying to play against this trend. So I certainly do not suggest anybody does it. What I do suggest is you practice. If you are not comfortable in this trading environment, practice and paper trade, and that can at least build an initial sense of understanding of how these bounces do end up playing out. And again, if you have interest in how we approached the December dump bounce, check out the video from December 24th. I believe it was the 24th, either the 24th or the 26th. It was the 24th, I believe, where we were talking about the example of the burning house and how we were looking to begin to go bullish because of how significant the fear was. And when the bounces are really good, the absolute lows are when fear, despair, and all of those emotions are at their absolute peak. When it's almost like the general market would say, what in the world are you doing going bullish? That marks the bottom, essentially. So we're not nearly as extreme in this current scenario, but I don't think we're going to get as extreme in this current scenario, which is why I'm scouting for the daily bounce. I appreciate you watching. We'll check back in tomorrow. Keep an eye on the commodities overnight, oil and gold, potentially setting up some trades for tomorrow. And be careful in all that volatility out there. Do good things. We'll see you tomorrow.